Hey everybody, it's Matt Bowles here, Maverick Investor Group. I want to welcome everybody to what I think is going to be a really substantive webinar for you. I have put together about 60 minutes of content that I hope is really going to add some value to you. Let me start off with a couple quick housekeeping items. This webinar, we're going to keep it to an hour, and then we are also going to have your questions in there and get you out back into the field so you can sell some properties this afternoon. So appreciate everybody taking the time. That definitely means that you're obviously serious about this, because there's a lot of people that don't take the time to do this. So let me ask you this. We've got a control panel on the right-hand side of your screen that allows you to ask questions. It also allows you to raise your hand and interact with me as I'm facilitating this. So there's a hand icon there, and let me start by asking a couple questions just to poll the audience. How many people on this webinar have been to a Maverick event before? You're fully registered with the Maverick community. You already know what we're about. Raise your hand if that's you. You've been to a Maverick webinar before. You're part of the Maverick Referral Network here, and you know what we as a community do. Because there's some folks, okay, great. You can put your hands down. Now, if you're new to the Maverick community, go ahead and raise your hand. You haven't been to one of our events before. You're not part of our community. You're here because you're interested in the content, but you're not part of the whole program yet. Okay, great. So let me just start this off by saying that we are not gurus. We are real estate agents just like you are. We are a community of real estate agents. We're not going to be selling you products or boot camps or any of that kind of stuff. Nothing is going to be sold on this webinar. It's going to be straight information for how you can increase your closings next year by selling residential investment properties, and how we can add value to you and work together with you to do that. So I was reading over, before we started this webinar, I was reading over all of the stuff that you put when you registered for the event in terms of what challenges that you were having finding, closing more investment properties and that sort of thing. And so I've really tailored this to try to address, a lot of people didn't have a certain knowledge in certain areas about how to sell investment properties and that. So I've really tailored this webinar to try to add value to a wide range of people. Let me ask one more question before we get started. How many people here deal primarily with primary homeowners and sellers? So they're trying to buy a house to live in, or people that are listing houses that other people are going to live in. How many people, that's your primary part of your business? You're not primarily selling investment properties. Okay, great. Okay, so a bunch of you, and that's fine because, and I know there's also some commercial real estate agents on here that do not primarily do residential investment property, right? They don't primarily sell single families or 2 to 4 units rental properties. They're primarily doing larger stuff or commercial stuff. And so for all of you that don't specialize in this space, this is going to be an additional stream of income for you to add to your business. And for those of you that do, hopefully we can really help you to ratchet up your sales and your success in the residential investment property space. So with that, I want to get started, and I'm going to try to tailor this webinar so that it adds value to both the investment property specialists that do this professionally full-time, and also to the new folks that are coming into the space from the primary home side of things, so that we're going to do all of this in about 60 minutes. So I'm going to start with some real basics here, but which are really, really important to understand why real estate agents should serve real estate investors. What are the opportunities and advantages of doing that? Why should you bother? Compared with just simply continuing to serve only primary homeowners, okay? Last year, U.S. residential investment property sales accounted for 27% of the entire residential real estate market. That's 1.23 million closings, which amounts to $123 billion in sales. Okay, that is a absolutely enormous chunk of the residential real estate market. And if you estimate that at 3% per transaction for the buyer side commission, that would come out to $3.69 billion in potential commissions for the buyer side alone. Now here is the rub, folks. The majority of those investment properties were not purchased through an agent or a broker. In fact, this is the NAR now, the 2012 NAR Investment and Vacation Home Buyer Study that did this and reported this data. Only 18% of real estate investors actually found their property through an agent. That means that billions of dollars in potential commissions were left on the table because these real estate investors were not served by real estate agents, and they went and go ahead and closed the property without you. That is an enormous amount of potential for you to step into that space, that underserved space of the residential real estate market, and begin serving investors and begin making those commissions. Okay, so let's talk about some of the advantages to serving real estate investors compared to primary home buyers and sellers. So primary home buyers move an average of once every 7 years. That's, it waves, maybe it's 5 years, 6 years, 7 years, 8 years, whatever it is, but about 7 years. They only list their property with the same agent that they used to buy the property about 18% of the time. And when asked why, they don't know why they list with a different agent when they're ready to sell their property, but they usually don't list with the same agent. And so primary homeowners usually produce no repeat business. That's the average. If you're one of the lucky 18% and you follow it up with your client and you send them a whole bunch of drip marketing, maybe you get the listing. If you're lucky, then on average you get repeat business once every 7 years. Okay, now we're talking about repeat business. We're not talking about referrals. Referrals are something totally separate. We're talking about repeat business, the same client buying from you again. On average, it's never. If you're lucky, it's once every 7 years that you get the repeat business. With real estate investors, let's look at them. They buy an average of 2 properties per year every year. Okay, so that's 14 properties per client over the same 7-year period that you might be lucky enough to get 2 out of a primary homeowner. Okay, real estate investors take no more of your time to serve than a primary home buyer, and usually less, okay, because real estate investors are usually pretty clear about what they're looking for, whereas primary homeowners, a lot of the time, you got to drive them around to 8, 10, 12 houses, and make sure that the kitchen is right and the thing and all this, and they take So investors are usually much more efficient and take less of your time to serve, certainly not more than an average primary homeowner. And real estate investors pay all cash for their properties 49% of the time, okay? And so you have less trouble with bank financing with investors. Some of them obviously want to finance, but a lot of times they'll pay cash, so you're going to have less often will you have trouble with financing. So when you get into a mindset of serving real estate investors, it changes the whole game for traditional real estate agents, okay? Because traditional agents, you work extremely hard, but one of the things is that you're competing for listings. You're constantly doing that, right? When you're serving investors, these are repeat buyers, and so there's no competition for listings because you're getting all your commissions earned from your existing customer base without listings, okay? I have had my real estate license for, I believe, 7 years now, at least 6 years now. And I was a real estate investor long before I got my license and got, involved with the agent side of things, and then I eventually got my license. So about 6 years now. I've never taken a listing in my entire career as a real estate agent. I've never taken a listing, and I hope never to take a listing, okay? Because this business model that I'm explaining to you here is just makes a lot more sense to me. And you don't have to adopt it entirely. You can continue to do listings, but you can simply add this as an additional stream of income. So the advantage, though, here and why it's been so much more efficient for me and for a lot of other folks is because you can generate rapid repeat business from each client you cultivate, okay? And then when you serve a real estate investor well, you develop a client for life. And that creates a stream of residual income through all of the repeat transactions that they do with you. So one of the things that I know about real estate agents, and it's true with pretty much all of them that I meet, is that they're very hardworking. I know you guys are extremely, extremely hardworking, and you're very attentive to serving your clients and giving them great customer service. The challenge is in the traditional real estate space for primary homeowners and sellers is that once you've given them that amazing customer service and exhausted yourself and just done an amazing job, there's not repeat business there to be had typically, okay? So in this case, once you give all that effort serving them and giving them that customer service and building that trust and developing that relationship, now there's a lot of repeat business to be had, and you leverage, okay, and get residuals from all that hard work you're putting in instead of starting over each time. So that's really the concept, and I want folks that are new to this space to just sort of understand those advantages and those leverage points there for serving real estate investors. So who are these real estate investors? Where can you find them, and how can you cultivate them as buyers? Well, a lot of people are surprised by this, and I want to go through some of these statistics. All right. First of all, they're all over the place, and most anyone is a potential real estate investor, including your existing client base. And I want to talk about this. 89% of all Americans who purchased a primary residence consider some form of investment criteria in their purchase decision. All right, that means that the consciousness about real estate as an investment vehicle, right, is there with the vast supermajority of people. So they understand that real estate is available as an investment. Most Americans who actually own investment properties, other than their primary residence, so they actually own rental properties, they don't self-identify as real estate investors. Okay, so that means that the solution isn't necessarily to go, figure out, where there are people who identify as real estate investors congregating and run down to your real estate investor club or this kind of stuff, because that's the only place you can find real estate investors. In fact, I found it to be quite the contrary. Most of the people that go to real estate investor clubs are there to buy education from gurus and, boot camps and training sessions on how to do X, Y, or Z. They're not necessarily there to buy investment property, okay? And so the other thing that's important is that most of the wealthiest people in America have a significant portion of their holdings in real estate, okay? So if you're dealing with primary homeowners who are reasonably wealthy, right? I mean, you're people who are doctors, people who are lawyers, people who are, whatever. A lot of these people may already be real estate investors, and you may not even know that that is the case. Or they could be potential real estate investors. Maybe they don't have any real estate holdings, but they would be open to it if you presented it to them, okay? So the question then is, what do real estate investors want? What is their view of real estate agents, and what are they looking for from us as real estate agents? How can we serve them, right? How can we step into that fold and take, add some value to that underserved space? Well, most active real estate investors, this was a survey that was done. This was an invaluable investor study, which was done by Real Trends along with Harris Interactive and Personal Real Estate Investor Magazine. And they interviewed active real estate investors. And they asked them about real estate agents and their opinions. And what they said is that they feel real estate agents are very important to the acquisition of information for investment purchases. They say they have not developed their own resource team to support their investing activities. They say they're just as likely to invest out of state as they are to invest in state, and they desire strong sources of deals and a better understanding of the options they have. That's where you come in, okay? That's what they're looking for. Next step is to provide consistent value, all right, to be able to provide value to these real estate investors or to these potential real estate investors. So what do they consider to be valuable? Supplying them data required for investment analysis when introducing them to buying opportunities. So what are the rental comps like? How much will this property rent for? Okay, what are the local economic indicators? Is this a good area to buy properties? Is it a good city to buy property? And are there jobs being created? Are there, is there a lot of rental demand? That sort of thing. Being able to deliver turnkey deals with tenants and local property management already in place. This is a big one, because this makes life easier for the investor. Investors don't want to do work. They want to invest, right? So if you can provide them, they don't want to be, most serious real estate investors, they don't want to be landlords. They don't want to be out there swinging hammers and rehabbing houses and that kind of stuff. They would love to be able to own rental property and be able to get the benefits of owning rental property without having to do the work of landlording and rehabbing and all that stuff. So if you can deliver turnkey properties, they're already renovated or they're new, They have tenants in place. They're performing. There's a stream of income there already, and they can just close on a performing property. That adds a lot of value. Remove geographic restrictions for your clients and get them access to deals in the best markets no matter where they live. Okay, that's a big one. And that one is a challenge for a lot of real estate agents who specialize in the local market. Of course, obviously, we're going to talk on this webinar about how to get them access to those properties. But that's an important one, okay, because investors want to be able to buy the best real estate investment properties, and you need to be able to deliver that. Get your clients access to unlisted deals, right? How do you go beyond the MLS and get them access to unlisted properties? How do you deliver deals with special prices and terms that are not available to the public? And how do you deliver consistently great deals? We're going to talk about all of this, okay, about how you're going to be able to do this. And this is going to be a huge, unique value proposition for you, which is going to separate you from your competition. Because all of these bullet points, I'm going to show you how to do that here in just a minute, and it's going to separate you from your competition if you can offer these things. It's also going to be very alluring to your client prospects when you can put all of these things in front of them and explain it this way, and you're going to be the source from which they can get access to this. So let's talk about how to deliver all of that to your clients. Leverage your time and use the Maverick Referral Network, okay? For the folks that are new to Maverick, we have set up a business model that facilitates your ability to deliver all of this to your clients and make a full 3% of the sales price when they close, all right? So you may have heard of Maverick Investor Group. If you're new to us, we've been featured in a lot of the real estate press. And one of the things that's very unique about our company is that we have set up, okay, so we specialize in investment properties. We specialize in turnkey investment properties, as I was describing there, unlisted properties, all that stuff that you just saw there. But what we did is we set up a real estate agent network. So agents from all different brokerages around the country can sign up with us. We sign a non-circumvent agreement with you, protect your clients, track your clients. And we agree to pay you a full 3% of the sales price. So the same amount that you would make driving buyers around all day long to find that perfect house, you can also make that. So this isn't, when we say referral network, we're not talking about, 25% of 3% and whatever you normally get as a referral fee. This is a full 3% that you're going to get through Maverick for every closing, okay? So here's the key leverage points and how we've set up our system to make your life easier, add value to you, and help you to get more closings. Okay. By using the Maverick Referral Network, we basically provide you with this with what we call a deal finding system. Okay, which is that we go out and find the deals, the premium deals, and then they come to you so that you don't have to spend your time looking for them. All right, save time, leverage your time, and we will put them in front of you and give you access to them so that you can introduce them to your clients. Sell the same deal to all your buyers. A lot of agents waste a lot of time because each individual buyer comes in and has their different criteria. Like when you're selling primary homes, right? Everybody's got a different criteria for what they want. They want this type of a kitchen or that type of a garden or whatever it is, and you got to go find stuff that meets their individual criteria. And if you've got 20 clients, you got to find 20 different sets of properties. Well, with investment properties, it's a lot easier because most people have pretty similar criteria, right? And they want a good investment property. And so what we do is we put that together and we put a set of investment property options together for you, buying opportunity, and your clients can all collectively be introduced to the same buying opportunity. Okay, so that leverages your time. Aggregate all of your buyers and present the deal to everybody at once. One of the things that Maverick does for our agents is that we host private buying opportunities through a webinar format. Okay, so the agents on this event today are from all over the country. And so what we enable you to do is to refer, introduce, invite all of your clients onto one of our webinar events. Okay, now when you register with us and we sign the non-circumvent agreement, you get a special deal code. Your clients have to use that to register for the event. They're all tracked back to you. You get a report and everything else. Okay, so your clients are protected, but what it does is It allows you to send out one marketing piece, which, by the way, we write and give to you an invitation, okay, for the buying opportunity. And you send out that email blast, and your clients can come on to the webinar, and they can hear from us. They can hear from the seller of the properties in the market that we're doing, that we're featuring. There'll be live inventory on the event, and then your clients can actually reserve property right there in that very night. And agents are, you're actually able to sell, in some cases, multiple properties in a single night, okay? And that allows you to do all this stuff at once and aggregate your buyers instead of having to go sit down and do a presentation 20 separate times for 20 separate people. And then utilizing the aura of exclusivity to generate loyalty and develop clients for life. As I said, join the Maverick Referral Network. Again, this is no cost to you, okay? We're not selling you anything here, right? We make money when you make money, okay? Because, we get a referral fee from the seller, and out of that, we pay you the 3% out of that, okay? So we have a vested financial interest in your success in closing properties. We're not trying to upsell you on anything else. So you can be part of our community at no cost and get access to all these resources at no cost, all right? Now then, when you go to your clients, you can utilize this aura of exclusivity, okay, by marketing that you are their source for this product, okay? You are the source for these unlisted properties, these out-of-state markets, these turnkey deals that they don't normally have access to. And once you get them into some great deals and they buy from you again and again, guess what? They're going to keep coming back to you. It's the only place they can get it, and you're going to develop clients for life and a lot of client loyalty. So what I'm going to do, I want to introduce you to a couple just agents in the Maverick community, what they're saying, so you can get a feel for that if you're new. And then I'm going to go into 2013 and why that is going to be a particularly unique year for serving real estate investors. So just want to show you what a couple of agents in our community are saying. This is John Swire, who was one of the top 25 agents in the U.S. for 5 consecutive years. All right, folks, that is not an easy thing to achieve. And here's what John says about Maverick. One of the things I love about Maverick is that you're going to earn a full 3% of the sales price just for introducing your clients to Maverick deals. You don't have to be the expert because Maverick is already the expert. So all you have to do is refer your clients over. What you should be doing is finding as many buyers as possible and funneling them into Maverick. All right, this is Mark Slaughter from Gulf Shores, Alabama. It says, I was a top producer in my local market before I met Maverick, but in my first year working with Maverick, I closed an additional 37 transactions on top of my regular business. Okay, so those are some top producer folks. Now I want to also get into some. This is an agent here, Wafat Shami from Coldwell Banker, who was a new agent. Okay, and she says, when I started as a new agent, I worked really hard for 3 months, but I didn't close a single transaction. Then I sent out one email invitation for a Maverick Buying Opportunity webinar, and my first closing happened immediately with almost no work, and I made a full 3%. Okay, so Maverick was her first closing after sitting in open houses and trying to do all that stuff for 3 months. Okay, so even if you're brand new to the space, you're a new agent, or you're at least new to the investment property space, you can absolutely just jump in the game with both feet and start earning an additional stream of income here because you probably have clients that would be interested in investing in real estate and you don't even know it. So step 6, let's understand why 2013 is anticipated to be the year of the real estate investor. There are so many things that are aligning to make 2013 an incredible year for buying investment real estate and for agents to serve real estate investors. And as you're doing your planning for next year, and I hope that this is all part of your planning process. I'm sure that you are all very diligent and you do work plans, action plans, business plans for how in 2013 you're going to be more successful. You're going to close more transactions and you're going to make more money than you did in 2012, right? And then this December period here, as things wind down for the year, is your time to do that. So with that in mind, let's go into the advantages of 2013 and why it's going to be such a robust year for this. I got to start with the background, okay? And especially for folks that are new to this space, this is going to be an important thing to understand. the seismic shift in the single-family investment property market that began in 2012. This is really important to understand why 2013 is going to be so robust. Okay, and we got to start back at the very end of February of 2012 of this year, when Warren Buffett was on CNBC, and he was talking about something totally different, talking about equities and stuff, and he mentioned something about single-family investment properties, and the woman that was interviewing him said, "Wait a minute, could you repeat that? Could you expand upon that? What do you mean by that?" And this is what he said. So this is Warren Buffett now, right? Pretty much internationally recognized as probably the most successful investor in the history of the world, right? Most likely. And this is what he said. If I had a way of buying a couple 100,000 single-family homes and I had a way of managing them, I would load up on them. It's a very attractive asset class now. It's about as attractive as an investment as you can make. This is Warren Buffett, right? And when he said this, it just triggered a whole bunch of things. And one of the things that happened very soon after he made these statements is that institutional investors, and we're talking about big players, right? They started clamoring to get into the single-family home space and to start buying single-family rental properties. Okay, so we're talking about multi-billion-dollar private equity funds, real estate investment trusts that usually buy only commercial real estate, and then other large institutional investors started rapidly deploying capital to buy up single-family rental properties in select markets. Okay, that's important. Select markets. So this phenomena that I'm explaining to you is very localized because there are only certain markets where this is going on. And that is one of the reasons why, we talked earlier about getting access to the best markets, and that investment properties is not a national it's not nationally equal. It's not you can't analyze the investment property market nationally. We need to do it locally. But, here's some of the press that started coming out about private equity betting billions on foreclosure. Blackstone, which is the biggest buyer of U.S. commercial real estate, has bought over 2,000 homes. This was back much earlier in the year. They bought many more than that now, spent over $300 million. The Wall Street Journal firms are flocking to foreclosure auctions. Colony Capital Group, at the time of this article, owned about 3,600 foreclosure homes, buying about 133 a day there in Atlanta, Georgia, and officials hope that they can increase the firm's inventory to 10,000 by the spring of 2013. Okay, and then some of these big players down here, you can see Colony, Blackstone, and some of these other groups have raised more than $8 billion to buy houses in these targeted markets that they have identified. And then here's another interview with one of the principals of Colony saying in the next 5 to 10 years, you'll see tens of billions, if not hundreds of billions of dollars of private equity pouring into the single-family rental business. Okay, and what the institutional investors are doing with the single-family homes, there's a couple different things that they're doing with them depending on the group that's buying them. In some cases, it's a buy and hold for cash flow for the long-term appreciation. In some cases, they're looking to liquidate these properties in 3 to 5 years and make a capital gain. And then in some cases, they're looking to securitize large portfolios performing single-family homes and create a secondary market for securitized rental properties similar to the secondary market for mortgage-backed securities. So they'll buy up 10,000 houses, and then they'll sell shares of that off on the market as securities. So those are some of the different models that these big institutional investors are looking at for how to make money in this space. The question, though, is what effect is this having on the real estate market? A major effect is the answer. It is literally moving markets where they are buying. Okay, the institutional buying activity and the effects on the real estate market are as follows. There is a very aggressive buying and deployment of capital in select target markets. So you got to know which markets those are. Number two, what's happening is in these select markets, it is dramatically increasing the absorption rate. So that substantially decreases the available inventory, and it substantially decreases the days on market. All of that contributes to home values going up very quickly based on increased demand, competition, and coupled with the decreased supply. So all of you real estate agents know how that works, buyers markets, sellers markets, and so forth. So all of these areas that have been flooded with foreclosure homes, they are absorbing all of that excess inventory and driving prices back up and pretty dramatically. So the question is, how can you benefit from this seismic shift in the real estate market in 2013? Okay, that background is important because it really started around March of 2012, and then different players started getting in the game at different times over the year, and now this is really moving into 2013, this phenomena is full steam ahead. And what's going to happen is they're going to buy these markets back up to at least to sort of an equilibrium point, okay? Because what happens is Wall Street has identified, right, an inefficiency, a market inefficiency they call it, okay, where you can buy fully renovated single-family homes with tenants in place for less money than the replacement cost that it would cost you to build that house. That's what they identify as a market inefficiency, and then the returns that they can get on that by renting it out to a tenant are far superior to most of the returns available in a lot of these different asset classes that they have access to. So it's a very lucrative proposition for them, and they're going to continue to buy it until the prices go up to the point where it's no longer advantageous. So how can you benefit? You can enable your clients to buy in the path of this growth and take full advantage of the momentum and ensure that they're buying based on real estate fundamentals. That's important because we don't want to just speculate on this. So we don't want to just say, oh, there's all these people buying this real estate, so therefore it must be a good idea for us to buy there as well so that we can try to get some appreciation out of our property. That's how a lot of people lost a lot of money about 7 years ago. So we don't want to just simply speculate, but what we want to do is we want to understand the market forces. So we do want to understand where the momentum is, where the markets are moving, and how we can buy in the path of growth. But then we want to overlay that with understanding that there are sound market fundamentals in the place where we are buying as well, so that even if that market movement was not occurring, it would still be a very good investment property to have. So those are the two things that we want to look for. And I want to just show you a couple examples now. Maverick operates in a variety of markets. We can talk about the variety of markets that we operate in. I just want to show you a couple really quick on this webinar today so that you can see what I'm talking about. So let's start with Atlanta, Georgia. You heard Atlanta, Georgia mentioned in that article as one of the markets where there is very heavy institutional buying activity right now. So that's definitely going to be that's definitely one of our markets that we have and will be continuing to focus on in 2013. So let's take a close-up look at the Case-Shiller Home Price Index, which has now been posted through the third quarter of 2012. And this is the Atlanta, Georgia home price trend since March of 2012. All right, that is what we have seen with the institutional buying activity. Now, one of the questions that you always want to ask is how much more upside potential is left. So when you see a graph like this and you see a dramatic increase in price over that period of time, well, the question then is, how much upside potential is left? Have I missed the boat? Is this all the way back up to the point where it no longer makes sense to buy? So let's pan out. You can see this is only since March 2012. If we pan out and we look at the home price trend in Atlanta since 2007, you can see that that whole thing I just showed you right here, yeah, it looks dramatic, but ultimately it's, the home prices are only up to here. And if you look over here, right, when 2011 began, the prices were all the way up here, right? So we're not even back to 2011 prices. In 2010, they were all the way up here. So it would still have to go all the way up here even to be back to the 2010 prices, let alone 2009, 2008, and so forth. So there's a huge amount of upside potential left in Atlanta, Georgia, and we are in the middle of definitely of a dramatic, expansion cycle for that market, but there's still a lot of upside to go. And so helping your buyers to get in now at this point in the market cycle, there's really no question about, have we hit the market bottom, and, all this stuff that buyers were worried about. Right now, you can show them this data. There is really no question where Atlanta's going. There's no question why it's going that way, or that it's going to continue to be moving in this direction. You've heard, you've seen these articles I showed you, this commitment from these big private equity companies. Yeah, we're going to buy 10,000 houses. We're going to do this and that, and Atlanta's one of our target markets. So you have a buying commitment there, and those realities are driving the prices in this direction. So being able to show this to your buyers and where they can get in now instead of missing the boat is going to be very important. Now, by contrast, I want to show you a close-up look at the Phoenix, Arizona market. Okay, Phoenix, Arizona is a market that has already been bought all the way back up. The funds actually started buying in Phoenix. It was one of the first markets they started buying in, and they actually started buying in, smaller funds mostly, but they started buying a couple years back. And we got our clients into the Phoenix market right around this point here, okay, and they did very well, and they, rode this all the way up, and so they did very well. Right now, we are not getting buyers into a turnkey renovated property model in Phoenix, Arizona. Why? Because look at where the prices are. Okay, so prices are here. If you follow this over, right, the prices were already back up to the late 2006 prices in Phoenix. Okay, so that is a huge difference between an Atlanta, where it's not even back up to 2011 prices, and there's a massive, upside potential there, versus Phoenix, which is already back up to late 2006 prices. And a lot of these big funds already bought in Phoenix, and they already bought Phoenix all the way back up, and now they're leaving Phoenix, and they're going to these other markets. Okay, so that, what they call that market inefficiency, right, that value proposition there to buy property for well below replacement cost, is no longer available in Phoenix. Now, Phoenix is probably going to be on the leading edge of restarting the pre-construction, new construction homes and that kind of stuff, and so when that part of the cycle is back, Phoenix will probably be leading that. But at the moment, the value proposition to buy under replacement cost is no longer available in Phoenix, and as a result, the cap rates on single-family homes in Phoenix, of course, also are lower than they are in places like Atlanta and other markets where the prices have not gone back up so much. So this is where it's going. This is where the funds are going to buy the markets back up to, and then we're looking at markets that are just in earlier stages of the expansion cycle. Okay, but remember what I said, fundamentals, folks. Just because somebody's buying something and markets are moving doesn't mean it's a good thing to buy. So you need to understand the fundamentals, whereby even if that was not happening, would it still be a good market to buy in? So for Atlanta, for example, it was ranked the #1 rental market in the U.S. by Forbes. The Atlanta Metro Chamber of Commerce is projecting a population growth of 90,000 people a year, every year, for the next decade. And the job growth is projected at 60,000 new jobs per year, every year, for the next decade. Plus, it was ranked in the top 5 most affordable cities. All right, Atlanta is also a Sun Belt market, and so it's a warmer area with a lower cost of living, and so a lot of the retirees are moving from the north down to the Sun Belt markets where it's warm and it is and particularly the ones that are very affordable to live in. So a lot of the focus, a lot of the maverick markets, again, are looking, a lot of them are in the Sun Belt, and they all have jobs positive, population positive, economic indicators, right? Because that's what we need to look for rental demand, and then for when you're ready to resell your property, demand from qualified buyers that are looking to purchase that from you. So let's just take a look, at what we're talking about here. So here's an Atlanta property that recently sold. I think this was in a month or two ago, or maybe it was the end of Q3 of this year. $103,000 for this property. Okay, built in 2005, 2,600 square feet, 4-bedroom, 3-bath house. professionally renovated, tenants in place on a 3-year lease, paying $1,200 a month, okay, for that property. So when you do the analysis, taxes, insurance, property management, of course, it's an out-of-state property, so of course you're paying for property management. And then we encourage you to throw in a vacancy estimate. We encourage you to throw in a maintenance estimate. You can make those numbers higher if you want, lower, or whatever, but just we encourage you to add them in there, because even though there's a tenant in place, down the road at some point, your property will have turnover, you'll have some vacancy, so factor it in. And then that comes out with a cap rate of 8.7% on this property. Now, as I said, prices are going up, all right? Prices today are going to be a little bit higher than this. And as prices go up, cap rates go down. Okay, so this is the trend. You get appreciation, and then obviously, that's how that market cycle works, as I showed you with Phoenix. So the sooner you get in, the better your numbers are going to be. The earlier in 2013 that your buyers get in, the better their numbers are going to be. I want to show you one market that we are working with that is outside of the Sun Belt, and that is Chicago, Illinois. Chicago is, let me show you the graph for this one. That's the home price trend in Chicago since March of 2012. Okay, so very similar graph there. Again, the institutional investors are buying in Chicago, and prices are going up in Chicago. Chicago is a very unique city. It's one of the top 3 largest in the U.S., so it's not a typical Rust Belt city or things like that, in terms of its Midwest location. But take a look at this, though. Okay, again, you saw that incredible dramatic upswing on that graph I just showed you, but take a look at what that is. Okay, we're talking not even back to the 2011 prices, let alone the 2010 prices, 2009, or the 2008 prices are all the way up here. Okay, so again, a lot of upside potential left to go in Chicago, but dramatic price increases going on and institutional buying activity going on. Again, though, got to make sure we have the market fundamentals there. Chicago, world famous international destination city, one of the top 3 largest cities in the U.S., right? New York City, Los Angeles, and Chicago. Those are the big 3. If you can buy in one of those cities, that's huge. Chicago is the #1 diversified economy in the U.S. It is a powerhouse rental market. This is an incredible statistic here. Over 55% of the population rents, compared with the national average of 36%. Rental demand is really robust in Chicago, uniquely robust. This is an incredibly high percentage of the population that rents in Chicago. So there's a lot of demand for that. Chicago is the 4th most economically powerful city in the world, $460 billion in economic output. It's an international financial center, home to 3 major financial exchanges, and it does a global derivatives trading volume of over $3 billion, which is nearly twice that of New York City. And it's home to 31 Fortune 500 companies. So it is a huge, stable employment center. So understanding the fundamentals of the market are sound, and then you overlay that with the institutional buying activity and the market movement, and you get both. All right. One of the things we're doing in Chicago, because of the rental dynamic of that city and how powerful that is we have a little bit of a different type of product in Chicago. So in Atlanta, for example, it's mostly single-family homes. In Chicago, we are primarily focused on 2 to 4 unit properties. Okay, so here's the historic 2-flat unit. And the difference really is that in single-family homes, a lot of the advantages are that you have they're traditionally, they appreciate the best. If you buy them in owner-occupied neighborhoods, which of course is where that home I showed you in Atlanta just there, where that's located in an owner-occupied neighborhood, you have the ability to resell it to an owner-occupant, later on down the road, and you have that sort of built-in exit strategy. And that is one of the primary advantages of buying single-family homes. Now, the 2 to 4 unit properties is more of an investment type product, so you don't necessarily have the owner-occupied communities and the resale exit strategy to the owner-occupant. but the countervailing advantage is that the cash flow is typically higher on the 2 to 4 unit properties than it is on the single family homes, and that's really the trade-off. So we've got investor clientele that prefer the single family homes, and then we've got investor clients that prefer the 2 to 4 unit properties for cash flow, and I'll show you what I mean. So these are historic properties, but they've been completely redeveloped. So the inside has been gutted. All the older stuff that could go wrong with the property, plumbing, electric, all that kind of stuff, they just gut that stuff out and just fully revamp these things. New kitchens, new baths, everything else. So really, the old part of it is just kind of mostly the exterior, and then inside it's fully redeveloped. So for $155,000, you're talking about a 2-unit property. Each side rents for $1,100 a month. Okay, so $2,200 a month in rent for this property. Okay, tenants in place. This thing's been fully renovated. You can see painted, hardwood floors, the whole bit. Upscale bathrooms. Really high quality renovations, and that's why they can do $1,100 for each side, $2,200. And when you look at the cash flow analysis here, again at the bottom, your estimated cash-on-cash return for an all-cash purchase is about 10.7%. So you can see that's substantially higher than the cap rates in Atlanta, which are in the 8s there, and actually probably starting to dip below that as we move forward and the prices continue to go up. So here you get a substantially higher cash-on-cash return. One of the other things about a market like Chicago is that it's much more stable, and what you can do is it's much easier to get conventional financing in Chicago because the appraisal market is much more stable. In a market like Atlanta, the appraisal market is all over the place, okay, because they're not adequately adjusting for raw foreclosure properties compared to fully renovated properties and so on and so forth. So the appraisal market is really all over the place in Atlanta. And a lot of times your appraisal will come in substantially below your purchase price because they're comparing it with raw foreclosures that just occurred and haven't been renovated and that sort of thing. So it's harder to get conventional financing in Atlanta. Most of our Atlanta properties are cash purchases. Whereas in Chicago, as well as other stable markets that we work in, like Houston, Texas, which is the 4th largest market in the United States, much more stable. Appraisals can come in, and demonstrate built-in equity. All right, you're buying below the value, and you can get conventional financing on these things, and that's a big leverage point. Because if you can do that, there's a 25% down payment example here. Okay. Look at all other costs being the same, right? Taxes, property management, insurance, maintenance, repairs, and then you throw in your mortgage, of course. But look at what that does to your cash-on-cash return at the bottom there if you can leverage your purchase with financing. Over 20% cash-on-cash return from this property currently available. How many other investment opportunities do your clients have that can produce them over 20%? And remember, we're assuming a repair and vacancy factor. We're assuming over $260 a month for repair and vacancy. At the beginning, there is no repairs or vacancy, right, because you just bought a fully renovated property with a tenant in place. So this number is much higher. This is the estimated, graduated average over time is 21.3%, okay? So just depending on what your clients are looking for, different markets may be more appealing to them. Different markets have different advantages, and then different products, the single-family homes versus the 2 to 4 unit properties, have different advantages as well, and those will appeal to different people. So let's talk about how to market investment properties to your clients in 2013. So knowing all of this, if you're new to this, okay, obviously we have people on the webinar today, and I know, and they're professional investment property specialists, so they know how to do all this, but I want to go through some of this for the folks that are new to the investment property space. You do mostly primary homes and that kind of thing. So you know about real estate, but let's talk about how to market investment properties to your clients. And again, of course, as I said, you can always do marketing to try to find active real estate investors. So if you want to do, Google AdWords or Facebook ads or, any kind of paid marketing stuff and, advertise investment property opportunities and this kind of stuff and bring people in. I mean, you can, of course, do that. But you can also, okay, and one of the least expensive and best ways to leverage your time is to market to your existing clients. Why? Because it's not cold marketing. You already have a relationship with them. You have already done the work building the trust. You have already done the work positioning yourself as a real estate expert. You are now their real estate expert. They now trust you. They now like you. Leverage that. It will go a lot further than trying to do cold marketing. Okay? So when you close a property, a primary homeowner buys a new property or you sell somebody's listing or whatever it is, have a follow-up mechanism where in addition to sending a closing gift or whatever you do, okay, thank you for your business and whatever you normally do, ask for a referral or whatever it is, offer them something else, okay? Offer them the opportunity to have exclusive access to investment properties, and here's why. Why would they want to buy investment properties? And this is some of the stuff that you need to be able to explain to people if they're not already real estate investors. So number one, it is one of the only asset classes that is adjusted for inflation. Okay, so one of the things people are really worried about right now in the economy is inflation, either the inflation that's already here or the inflation that is on the way. Okay, and they want to know how to hedge against inflation. Real estate investment properties are one of the only ways, one of the only assets that allows you to do that. Okay, why? How does that work? Well, inflation goes up, the prices of houses go up along with inflation. Okay. Then also the rents for your properties also can go up with inflation because you renew the lease on the property. Okay, so you know how your rent, if you rent the property, your rent goes up pretty much usually every year. Okay, so the rents rise with inflation and the home prices rise with inflation, so it is adjusted for inflation. Historically low interest rates. This is also related to hedging against inflation, and this is really, this is the huge kicker. Interest rates are low, so what that means is, number one, it improves your cash flow, of course, because your mortgage payment is less, so your monthly income is greater. But number two, right, I mean, you just saw this analysis on the other page, right? So your returns are higher, but the other thing is that you're locking in that low interest rate, okay? And so you are, for 30 years, going to be paying back the bank in 2000 and, if you get this loan in 2013, you're going to be paying them back in 2013 dollars, right? So if the value of the dollar goes down, the bank is stuck with that loan at that rate, and you are benefiting from that. You, the buyer, right? Your clients are benefiting from that. So if they're really concerned about inflation, buying investment real estate, and if possible, taking out financing on it in addition to that, that's a second layer of how to hedge against or even profit from inflation. So that's important. Now, you've also got Warren Buffett's endorsement, which is mega social proof. Okay, this quote that I just showed you, again, Warren Buffett, regarded worldwide as the most successful investor currently today, and arguably, the most successful investor ever. I mean, a lot of people would make that argument. So you've got Warren Buffett saying what he said about investment real estate. You've got the institutional buying in full swing. You've got data that I'm showing you here today to show the market movement, okay? And then, honestly, the most simple way to market to your clients is just simply to show them the cash flow analysis that I just showed you and let them just compare real estate with other asset classes. If you put that in front of them and you show them that 21% return, and this is not projected, right? We're not talking about estimating how much we think we might be able to get for rent or this kind of thing. We're talking about a property that is currently existing and sitting there, currently renovated and looks like what I showed you, currently has tenants in place paying the rent. They get to review the rent leases and everything as part of their due diligence, and that is, in fact, what it is. Now, obviously, they're going to qualify, for their mortgage. They're going to get the rents quoted to them from the lender or whatever it is. They're going to do all their due diligence to verify it. But if that's right, and they can make over 20% cash-on-cash return, and you just put that in front of them, how many other places can they do that, right? So everybody's got to invest their money somewhere, whether they put it in a savings account or they put it in a CD or they put it in a mutual fund or whatever they do with it. All you're going to do is give them an opportunity to see what investment real estate can do for them, and just let them compare that to whatever else they have access to. Say, hey, my mutual fund's not quite producing those returns, and stuff. And again, if you already have that relationship, you already have the trust built, you are miles ahead in being able to have a serious conversation about that with people. So I want to conclude here and open it up for questions. And let me just conclude with how to get involved. If you're not already registered for the Maverick Referral Network, just go to maverickinvestorgroup.com/refnet and enter in your broker information there. You're going to put your name and your brokerage information, and then that's going to generate for you a non-circumvent and referral fee agreement where we're going to give you your own deal code to track your clients. We're going to sign a non-circumvent agreement, so when your clients come into us and they buy, they're your clients. They're always going to be your clients. You make 3% for everything they buy, and we are going to pay that to your broker. And then, as I said, you make a full 3% of the gross contract sales price on every property that they buy. So that is how it works. And again, if for the new folks, a lot of this stuff went by really fast, if you didn't absorb it all, number one, we're recording this webinar, so you're going to get a recording of it so you can watch it again. But number two, remember John Swire's quote that I read you there. You don't have to be the expert in all of this stuff, okay? Because what you can do is you can refer your clients to, let's say, a Maverick Buying Opportunity webinar where we're going to go through this. We're going to take your clients through this on a webinar just like we took you through it. And then we're going to show them about the market and show them about the deal and show them about the cash flow analysis and then give them an opportunity to buy. And so you don't have to be the comprehensive expert on all this stuff. You just need to be able to make a value proposition to your clients that you're able to get them access to this stuff. And then once they come in and you get them on the webinar and they're here, we're able to present that, we're able to answer the questions and so forth. Now, if you prefer to do that yourself, or you're pretty well versed in this stuff, or you want to learn it and get versed in it, you are absolutely welcome to take these properties and this information and go ahead and market it to your clients yourself. No problem with that. A lot of people are set up to do that, and that we have real estate agents that do that. Okay, they don't, they just take our resources and our properties and go ahead and market them their own ways, put your own branding on it. However you want to do it, we can work with you to do that. I just want to explain to you the resources that we offer and what we have available in terms of how we can make your life easier and how we can leverage your time and how we can help you to get more closings in 2013. But this is definitely going to be a seminal year for real estate investors. If your clients want to get in before these other markets go the way of Phoenix, Arizona, 2013 is the year to do that because these markets are aggressively being bought up right now, and we have unique access to high-quality turnkey properties in the path of growth in the most sound real estate markets in the country. And we want to work with you to help to get your clients into that, help get them great deals, help your clients build their wealth through real estate, and, of course, help you do more transactions and make more money in 2013. So, again, the registration is at the bottom of this page. We're going to take some questions now, so feel free to type your questions into the question box. For anybody, by the way, as you're typing your questions in, anybody that did not attend this webinar, if you're watching this on a recording, obviously you didn't get to ask your questions. You can email me, matt@maverickinvestorgroup.com, right there on the screen. Emailing me your questions, and we'll get back to you on that. And then you can just register also at the website at the bottom, mavericinvestorgroup.com/refnet. And as soon as you do register, we're going to actually give you, as soon as you register, we give you a couple marketing documents to help you out with some of your marketing. You get that for free, and then we'd love to have a phone conversation with you, do a consultation with you, hear about where you are and strategize with you about how we can add value to your business. So if you primarily deal with primary homeowners and sellers, or if you already have an investment property operation set up, and you want us to be able to plug in, supply side, property sourcing, for your operation that you already have, and you want to do your own branding or whatever it is, we're happy to have a phone consultation with you and customize this for you as best that we can, so that we can add value to your business and work together with you. So go ahead and register if you're not already, and then we can be in touch right after that. So with that, I will take some questions right now. You can type them into the box. I see we've got some that are already coming in. I'm going to try to start near the top. Okay, some of these questions were probably posed a little bit earlier on in the webinar, but I want to just make sure that I answer them in case they're still standing. How can this work for a rural lake area? Well, the answer is that you can help your clients buy out of state, so they can live. Remember, folks, the concept is they can live wherever they want. If you want to live in a rural lake area because you love that, that's great. You should be able to do that. Doesn't mean you need to buy investment properties in the rural lake area. You should live in the rural lake area and buy investment properties in the best markets to buy investment properties, and that's what we help you do. Buy out of state, fully turnkey, with local property management in place in the best markets. So maybe one day you decide you don't like the rural lake area, you want to live by the beach. Well, go ahead, move out to the beach. It doesn't affect you because all your properties are in good markets with property management. So you can move, travel, live wherever you want. You're not tied to or geographically restricted in one particular area. Okay, do you have a website that we can go to and see what you currently have available, including cash flow reports? Yeah. If you, as soon as you sign up here and register, yeah, absolutely, you'll get access to our inventory. You can go and see the different markets that we have properties in. You can go and look at some of the specific properties that we have. And take a look at all of that. If you're looking for something specific, you can also email me and we can work with you on that. Do you operate in other sub-markets in South Texas? We have the main Texas market we're focusing on right now is Houston. I only just threw up a couple on this webinar just to give you a couple samples. We really like Houston. I mean, of all the Texas markets, it's the fourth largest market in the country. It is the #1 city in the U.S. for job creation right now. It is really booming, and the price to rent ratios there are also quite advantageous at the moment. So we're really like a lot of what we're seeing in Houston, and at the moment, that is the Texas market that we're focusing on, but we're absolutely open to reviewing, and we're constantly reviewing different markets and that sort of thing. So we may be expanding shortly, but right now that's what we like in Texas. Do we get something for referring other agents into the system? I think that means, can you get referral fees for referring other agents? Unfortunately, we don't really have a way to do that, because by paying out a full 3% to the agents, that doesn't leave a lot of additional money to pay somebody else on top of that for referring that agent. One of the things you could do is you could potentially work out with the agent some sort of split on your side. So out of the 3%, if you wanted to ask the agent for, whatever, 25% of their fee for, you introducing them or whatever it is. If you guys want to work that out of the 3%, you're welcome to do that. But we don't have something structured for agents to refer other agents and get into a multi-level thing and all that, because we just, we want to make sure that agents are compensated the full 3%, and we don't have much on top of that to do a multi-level thing with. So do you have a quick link where I can see what buyers see? I'm not sure exactly what that means. Typically, the way that your buyers will interact with Maverick is that you'll be able to refer them to a webinar. So they're going to come onto the webinar just like you did today. I'm going to host it just like I did today, except that I'll have the seller with me who runs the company where we're sourcing our turnkey properties from, and I'm going to interview them. We're going to talk about the market, the product, and that sort of thing. So that is what your buyers will see. What we have done, and what you can see, if you want an example of that, is that when you go to our website, when you register here, you're going to get access to our website, and you're going to be able to see our markets and our properties. We do have the recorded webinars on our website. In order to access them, of course, you need a deal code. So your clients would have to enter that, and you can enter that. So as soon as you sign up here, you'll get a deal code, and then you can access that, and you can actually watch a buying opportunity webinar in any of these markets that you want: Houston, Chicago, Atlanta, and so forth. And you can see exactly what the buyers will see. Do you have access to support personnel in those areas that can take care of these properties? So these properties all come with local property management in place. So the answer to that, by support personnel, I suppose you mean property management. So the property management will comprehensively, take care of the property. So whether it's leasing the property, if anything happens, the tenant doesn't pay their rent, they do the collections. If you should ever need an eviction, they oversee and do that. If there needs to be maintenance or repairs or something, they schedule that. They handle all that. You're not going to get, your clients aren't going to get any phone calls from any tenants. Tenants not even going to know who owns the property. Okay, so your property management company handles all that on the ground for you, and their fee, as I mentioned, is factored into this cash flow analysis. So they take a percentage of the gross rent every month, and you're going to factor that in as an investor. And you, of course, can use any property management company you want, by the way. You own the property, and you can use any property management company you want, and we can certainly give you a list of property management companies in each market. You can select anyone that you want. There's usually a property management company that's affiliated with the seller, and so that is typically the preferred property management company. We also think that they typically have an extra incentive to manage the property well, because the seller is interested in repeat business, right? Just like we talked about at the beginning of this event. So if your property performs, then you buy again, and that's what they're really interested in. So, but you're welcome to use, your clients are welcome to use any property management company they want. Okay, next question. Is your inventory made up of properties owned by Maverick Investor Group? Okay, so Maverick Investor Group does not own these properties. Okay, Maverick Investor Group is a licensed real estate brokerage, and what we do is we study markets, like I showed you a little bit in this webinar. We go into those markets, we spend time in those markets, and we develop business relationships with companies on the ground that acquire, renovate, and lease out these properties and create these turnkey performing properties. So we have a relationship with, a contractual relationship with turnkey property providers in these markets. And those turnkey property providers are not listing their properties on the MLS and that sort of thing. They're selling them through private buying channels like Maverick Investor Group. Okay, so that's how you're able to introduce your clients to unlisted properties that are not available to the public. This is not something you could go into one of these markets and, go into, just hire a real estate agent and find these properties. Okay, but no, we do not own them. And so then what happens is, at the closing of the property, the seller right? The seller will have a licensed broker on staff or whatever. The brokerage affiliated with the seller will pay to Maverick Investor Group an out-of-state broker referral fee, okay? And then from that, we will pay your broker the 3%, okay, as an out-of-state broker referral fee. So that's how that works. Okay, so additional questions. All right, so we're going to wrap things up then. If you are not registered, here's the website. Go ahead and do it, maverickinvestorgroup.com. When you jump off the webinar, folks, there's going to be a couple survey questions that are going to pop up on your screen, and we would love your feedback on this webinar. It just takes 2 minutes. As I said, we're not selling anything. We're not doing the guru stuff or upselling you or whatever. We just wanted to add value to you and just provide some substantive content. And so we want to continue to do that for you and have educational events that add value, help you make more money. And so if you could just take 2 minutes and give us feedback on how we did today, what you liked about it, what you'd like to see more of next time, or what you'd like to see differently next time. We read every single piece of feedback. We take it all into account, and we try to cater and tailor and adjust and develop to better serve your needs. So in conclusion, we have the same financial interest that you do. If you're able to close properties with us, we make money and you make money. So our financial interests are aligned. And so we would like to support you however we can in helping you to bring buyer clients, to cultivate real estate investors, and to close more properties, because we all make money when that happens. So when you sign up, definitely register for the phone consultation. We're going to give you an opportunity to do that, and let's be in touch and see how we can make some money together in 2013. Make our clients a lot of money in the process and help them build their wealth through real estate, and really have a fantastic year in 2013. So thanks everybody for your time, and have a great day.